Darren, thanks for coming in. Everybody's talking about the UK. Everybody's talking about GBK. Were these results about GBK?
Yeah, it seems that way. It feels that way after today. Lots of questions, but it's understandable. I think, no, they're not about GBK. I think GBK is one component of our business. Our business has performed well in other areas, but we acknowledge that the GBK performance over this period has been really tough.
And here in South Africa, let's talk about that toughness. Have you been feeling it as well?
We had a very tough first half, so up through to the back end of August, we found it very, very hard.
Yeah.
But we've seen some better prospects. From September onwards, had a good trading season in December, and it's filtering through. So our second half was much better.
What is tougher, if you can tell me, Darren? Are people not coming through into those shops? I buy my coffee all the time. I mean, who is not coming in?
No, I
well, I try to. When I have money in my pocket.
Well, I think that's the issue. What we have seen is that people are still loyal. People still want to go out, but frequency of visits has dropped. So, instead of maybe 2 or 3 times a week, I don't know how often you have, but you're down to 2. So we've certainly seen frequency has dropped, less than spend per head. People still sort of spending a similar amount, but the frequency down. Yeah.
You speak also about the impact of competition within the sector. Just take us through that and what it has done to you and your margins.
Competition has been good over the longer term period because it does grow the industry, absolutely. But we've seen, obviously, as consumer spend has been constrained, then there's obviously wider choice and better value. So we've felt it over the time period, but we're feeling now that competition is less intense than it used to be in terms of new entrants to market.
Yeah.
So now really it's a bunch of players that are really fighting for a smaller market share. So I think from our perspective, we're probably feeling a little more comfortable than we did, purely because the global guys are in here now and they're all having to fight for their share. They're not trading off the halo effect of entry, which often gives them some upside and does give the industry upside as well.
Yeah. What have you had to do? Have you had to reduce prices in order to be able to compete?
No. I think we know the consumer is looking for value, so not necessarily reducing prices, but really looking around menu and value. Looking around, making sure that your portion size is correct for the pricing. So looking at getting the correct price points into the marketplace, not necessarily reducing pricing, but what that does do is impact your spend. So you are getting less for every transaction through the door, but at the end of the day, feet count, and that's the most important part.
Yeah. So you have been acquiring businesses over the years. It's a regular feature for journalists that you go to famous brands, there's another acquisition that's been brought in. Now you're saying you're slowing down a little bit. Is this the consolidation phase, and for how long would that likely go? And I'm going to come back with a question on that, Kitty, and whether there is anything still that you can do.
Yeah, I suppose consolidation is not a very romantic word, so
it's
not something we'd like to use. But I think a period of reflection has been important, and really looking at our assets, knowing what the good assets that we've got, looking at particularly our leading brand portfolio and putting energy and effort behind that. So acquisitions are not off the table. We obviously have been constrained by the balance sheet because we've taken on debt. So the size of the acquisitions are what we look at, and obviously if it was something really good, we would have had to go into shareholders to look for equity, and that's really got to be attractive because we're not going to go and do that without something attractive. So no, acquisitions are not off the table, but the last one was December 2016.
It's been a while.
Yeah, and I think probably the timing was fortuitous because we've had some challenges in the UK, so we've been able to focus on those. South Africa, the first 6 months of last year was tough. We'd entered a technical recession. So in a way, it's probably been a blessing in disguise that we've been able to focus on the core business.
Absolutely. That portfolio is huge. I mean, we're talking 25 restaurant brands here, 2,853 restaurants across South Africa, Africa and the Middle East and the United Kingdom. Is there going to be some kind of downsizing, or are you comfortable with the brands that you have? And what are you having to do in order to be able to, in this consolidation period, what does it mean? Is that head count down? Is that restaurant count down? What is it?
No, I think it's really just about focusing on making sure that the brands are relevant for what's happening in the consumer space, particularly in our signature brand portfolio, which we've been building over many years. Now, our leading brands we think are more relevant, but there's work to do in signature brands to make sure that we've got the right portfolio. We've got a nice evening dining portfolio, but there's a few things we need to work around. And that has been the interesting part of the recession last year, is that the consumer was quite hard hit in the upper end of the market, which has never typically happened in South Africa. We always thought that customer was bulletproof.
Yes.
But it's been a bit of a challenge. So just making sure those brands are relevant. So that's probably more where the work is. I don't think you're going to see a rationalization, but really us allocating resources to the right brands and making sure that we're keeping in touch with consumer trends.
Sure. 2 quick questions.
Sure.
GBK, is all the pain done? I say 100 million in impairments.
I think certainly for now, based on what we know, the pain has been taken. but it's a very difficult market right now. I mean, the market is certainly not on the up yet, so we need to be cautious about what's going on. But for what we know, and at our year end, we certainly hope so, and we are in for the fight.
Yeah.
But Brexit is a major factor around what's going on, and I'm yet to meet anybody that can give you absolute certainty on what's going on and where it's going to land up.
Absolutely, but they still have to eat even if they exit. What about Cyril Ramaphosa? 100 days up on Saturday.
Oh, fantastic! Yeah, really.
What do you make of what he has done and what it means for your business?
I think from our business, there's probably been an immediate impact. I mean, it's always difficult to tell, but when people feel good about themselves, they are quite happy to enter into discretionary spend if they've got the money. And we have certainly noticed some kind of effect. It was difficult over December because that's our peak season, but we've certainly noticed consumer sentiment at restaurant level has improved, and there seems to be a propensity to spend across the board, especially around the middle income, which has been quite pleasing for us.